KCAA, the station that leaves no listener behind.
Welcome to the International Wealth Builders Show with your host, Dr. Sharon Barnes. I am so excited today to share this show with you. And if this is your first time tuning in, I want to say welcome. I hope you can stay for the whole hour. And if you've been one of our returning listeners, you know that my show has been dedicated to helping provide education, resources, and local providers to help you build accessory dwelling units to leverage the property that you already own and control. Today, we're going to broaden that scope a little bit because, in working with clients that are building accessory dwelling units, we find that a lot of them are building for their parents, and parents often have homes to sell. We also are finding that more and more people are looking to purchase homes that either already have accessory dwelling units on them or have enough land to build them. And so today we're going to broaden and talk a little bit about buying your next home. And we have a fantastic um, homeowner assistance program that just launched this week. I mean, just a few days ago. And it is really taking off. We have our guest here who has already processed dozens of applications, whose phone will not stop ringing. And we want to get the information out to you as to what this program requires, how to utilize it, so that we can actually help you buy your next home and help improve our quality of living and to really just make the buying process a very favorable process for you. So since we're dealing today with the buying and selling of real estate, I also want to let you know that in addition to being an accessory dwelling unit specialist and CEO of ADU Advantage, I am a licensed real estate professional with Caldwell Banker Riverside, where we have over 100 agents and a fantastic team to help any buyer find the right home for them, especially in the Inland Empire. And my DRE number is 013-6937. Just so you know, we're all in compliance and we can give out valuable information. And you can contact me online at SharonBarnesRealEstate.com and reach out to me if you're looking to buy a home. So at this time, I want to introduce Lucia Solis from Guaranteed Rate Affinity, our very special guest today. She is a very experienced loan officer. She has over 2 decades of experience. She loves working with buyers, whether you're a first time buyer or experienced investor. Her knowledge is very versatile and she has a long track record of satisfied clients. And she is at the forefront of this new homeowner assistance program. And so we're going to have a conversation and take advantage of the experience that she's had this week in helping buyers and what it takes to qualify, some of the tips that she's already encountered and can share with us. So welcome, Lucia. I appreciate you taking time out of your Saturday to join us to tell us about this fantastic new program.
Great. Thank you so much. I really appreciate the opportunity to share. Like you've said, my phone has been ringing off the hook. So I'm hoping with this talk show, we can reach more home buyers. Um,
Exactly.
I am with Guaranteed Rate Affinity. And just in case, my mortgage license number, 260848. Um, okay, so let's go into it because this is, I honestly feel like I have been sharing this information over and over, maybe over 20 calls a day. So
Yeah, so can you give
I,
us the proper name and then let's get into
I
some of the
will. I think,
qualifications?
to be honest with you, I think I do it in my sleep too now. But anyway, okay, let's talk about it. It's a program introduced by Cal HFA, which is the California Housing Finance Authority. It's called the California Dream for All Shared Appreciation Loan. So this program is only for first-time buyers. You are considered a first-time buyer if you have not been on title of a home for the past 3 years. And that is something that once you're in the program that we will verify. So you have to have not been on title, not of your parents, not of family members, not as a, co-signer. Sometimes they put you on title. So it's important. The key is that you are a first-time buyer.
Okay.
uh, how we qualify you, what are the steps, and how the program works. The program allows up to a 20% down payment assistance, which I'm going to give you an example. I'd say an average home price in Riverside would be about 500,000.
Right.
If you were to make an offer on a home, get your offer accepted, and you're approved in this program, the government will give you 20%, which is 100,000. It is a silent second. It's a loan that sits on the home with you. Like
Okay.
you get two loans. You get the 400,000, and then you get 100,000. Both loans are tied to the property once you close escrow. The second loan for the 20% is not forgivable. But the good thing, and I've been in this business for over 20 years, I've never seen such an aggressive program for buyers to actually qualify. You do not have to make any interest payments on that home loan and on the second, and you do not have to pay private mortgage insurance. So which what it does, it makes the payment for the purchase much more affordable for our first time buyers.
So because it's the 20%, there's no PMI. So
Exactly.
that helps lower the payment. And then
Yes,
they're only qualifying for 80% of the purchase value. So that helps lower the payment.
exactly. It's as if they're
Okay.
buying a home for 400,000
Okay.
and putting nothing down, but there's no PMI. So with that said, the first step, oh, let me just explain. So we assume we approve you in the program. So that loan will have to be paid at some point. Um, this program was introduced last year and it didn't do well because of the parameters of the program. So they went back with a lot of these top lenders in that work with Cal HFA, and they designed it. So one of the things they allow is for the buyer to actually refinance one time. So assume today's rate is 6.375, and or 6.125 if you're considered low income. If rates were to drop, say to the low fives, and you want to refinance, they allow you to do it one time without having to pay the second back. So that's a great feature on this program.
So can that be a cash out refi as well?
No,
Okay.
no. It would
Okay.
be just to lower your payment because rates went down. So
Okay.
you're not stuck, you have that advantage. The second time, though, however, if you want to do a refinance to pull cash out, you would consolidate the first and second. So at that point, it would have to be repaid. Now,
Okay.
it sounds too good to be true, right? So the title of the program is California Dream for All Shared Appreciation Loan. What does that mean? That means that second loan for 100,000, you have to share in the appreciation of your home. So you have to pay back the 100 plus a portion of the appreciation. Now, if they gave you 20%, because you can get less, you can say, no, I don't need 20, only 10. But let's assume you do the 20%. When you go to sell the home, they will look at how much you bought the home for, assuming it's 500. Let's say you sell your home 10 years from now at 700. You've built 200,000 in equity. So
Right.
of that equity, you have to share with CalHAFA. So they would have you pay 20% of that equity back,
Okay.
meaning if you have 200,000, CalHAFA would get 40,000 and you would keep 160.
Okay. So there's no interest on that loan that's there. There's no payments due, but and you're allowed to refi one time to lower your monthly payments. But once you refi a second time or sell your property, then you not only pay back that principal of the 20% down, you also give, say, 20% of the accrued equity out of your home. Okay. So, I mean, that's the cost of having that benefit, right? Without
Yes.
any monthly payments. Okay.
So you're building wealth using government funds. Really,
Exactly.
you wouldn't have your 160,000 equity. But so there's four ways you would have to pay it back. One, the second refinance. Two, you sell the property. Three, if you get to the 30 years, at that point it's due. And the last one is if you change title. So the key is here that you cannot change title of the home. So if you get married, you want to add your husband, that's going to be or wife. At that point, it'll trigger that you have to pay it. So basically, you have to remain on title. Another great feature of this program is that you have to occupy the home only 1 year.
Okay. So you only have to be in there 12 months.
Yes.
Okay.
Mm-hmm.
Now, I also understand, or there was a discussion that if you're only in there 12 months, but you keep the home, but you could turn it into an investment property as long as you don't sell it.
Exactly.
Okay. So after 12 months, you could buy another home and then go into using that one as an investment, and as long as you keep it. Okay.
Yes.
That's a good deal. We're
It
going,
is.
yeah.
It's a great deal. Okay.
So we're gonna we're coming up on a short break here, and then when we come back, we're going to continue with the requirements and ways you can leverage this new homeowner assistance program in California. Stay with us. Take good notes. We'll be right back.
This is Steve Matley. Join me every Thursday at 3 p.m. right here on KCAA for Building Solid Foundations radio talk show. I spent decades as a professional construction manager, business owner, real estate developer, and a college educator, and I enjoy learning new things from other people. We talk a lot about real estate, business, and finance, but we cover a diverse range of other topics as well. Some of the topics we've discussed in the past few months include real estate investing, leadership, higher education, ADUs, marketing using technology, multifamily rental properties, business strategy, entrepreneurship. You never know who may show up or what they may talk about, so join us right here on KCAA for Building Solid Foundations Radio.
Hello! Welcome to Fire Up Connect. Are you a small business owner? Do you lack the resources to manage your business? Is visibility and brand awareness a top priority for you? Fire Up Connect is a community of small business owners. We help our members find the right connections and the right resources to help them be successful. This isn't your typical business networking group. Members of Fire Up Connect are innovative, driven, and all about building long-lasting relationships. We work to identify your goals and understand what it is you do and how we can help you brand yourself and your business. Fire Up Connect is about creating business opportunities, community projects, educational sessions, and live seminars to help implement effective marketing programs for our members. Fire Up Connect helps members gain validation in their businesses, learn what challenges similar business leaders are facing, and access to subject matter experts on how to overcome these challenges. Fire Up Connect offers opportunities for organic exposure through our many marketing events, programs, and projects. There are 4 colors that make up Fire Up Connect. Yellow represents the back office and services available to Fire Up Connect members. Red represents Fire Up Connect's marketing and advertising resources, such as TV shows, radio, magazine book publication, and movie projects. Green represents Fire Up Connect's referral system, tracking incentives. And blue represents Fire Up Connect's donation, fundraising, and scholarship programs. Fire Up Connect members have access to monthly business sessions, price discounts on affiliated companies, and all Fire Up Connect programs, book publications, published articles for your business, access to Fire Up Connect scheduled webinar events, a photo shoot session, and a video production. Join us for our annual Fire Up Live seminars and gain valuable connections in the Fire Up community and boost your business. We believe in your business. We believe in what you do. At Fire Up Connect, we believe in you. Join us for our annual Fire Up Live seminars to gain, discover, and get fired up.
Real Men of Real Estate.
Men of Real Estate radio show here on KCAA.
Most mortgages can be purchased.
All of us want to live in thriving communities.
Basically, go to the radio station, KCAA radio.com.
You can find us on your dial at 102.3 FM, 1050 AM, as well as 106.5 FM.
International Wealth Builders Radio Show with your host, Dr. Sharon Barnes. I'm here with Lucia Solis from Guaranteed Rate Affinity, and we're talking about the new Cal HAFA Dreaming Equity Share Homeowner Assistance Program, which is a mouthful, but it's a very aggressive program, as you mentioned in the last section. And we're going to continue to talk about requirements and how you can take advantage of them. Lucia, I understand that that the FICO score impacts like the debt to income ratio. We have buyers who have had problems qualifying for loans in the past because their debt to income is too high, or maybe they haven't been able to save up to 20%. So can you kind of touch on that as you continue to share with us some of the issues and tips you can give us from your experience this week?
Sure. In the program requires a minimum of 660 credit score for low income. They have to be below the Fannie Mae income 80% AMI and to go that low. So very few will qualify in that segment. But if they have over 680, they can qualify with being moderate income. And then if they have over 700, okay, the way it works, I'm sorry, the 700 credit scores allow the individual to go up to 50% debt ratio. What that means is if you make $6,000 a month, that all your debt cannot exceed $3,000, but you have to have a credit score of 700 for that. If you're below 700 and no lower than 660, the debt ratio is 45% of the income.
Okay. And then if people aren't, say, quite there yet, that they need to work on their credit, do you have a program or do you have anything that you recommend for them?
We do.
Okay.
What we do is we do a soft pull on the credit. And so with the soft pull, we're allowed to look at their credit and kind of go into a system called Credit Expert that allows us to play with their credit. Like, what if they pay off this credit card? What if they pay down this? What if they, it's a what if scenario to see how they can boost their scores. So
if they're interested in buying here in, say, the next 6 months or less, or want to take advantage of this program, it behooves them to get in line right away to see where they stand, whether they can qualify today under the requirements, or whether they need some type of assistance and plan to get where they need to be with their FICO score in order to take advantage of the program.
So I did 2 yesterday that one was 585 and the other one was 605. And by guiding them on what they should pay down and how they should structure their debt, they were able to both get approved in the program once they do all that. So yes, the first thing is to apply. It's a soft credit pull, meaning you will not see an inquiry, will not impact their scores. So it doesn't hurt them to do that. And then we kind of advise them, if their credit needs a lot of work, then we would recommend a credit to deal with a credit company that can better guide them.
Okay. Well, if they're in that scenario, since we're talking about them, do you have a portal or a way they can contact you to start that application process or to get that short pull?
Absolutely. They can call me for one. It's 562-587-2669, or they can go on the website, my website, directly to apply. It's grarate.com/Lucia Solis. I'm sure we can post that. Do we have the ability to post that?
Yes, we will post it when we re-edit it, and then at the end of the show, we will give that information again, and then they can reach out to either one of us and get in contact with you. But I just wanted to take this opportunity because I've already talked to a few of my clients that need to get in line, and I wanted them to be aware of the fact that you are available and how to contact you. So I didn't want to skip over that part when we're talking about getting in line here.
Okay, so the funds are limited. So yes,
Yes.
important. So here's what I'm going to say. For Riverside County, the maximum income in order to apply is 173,000. So if you make over that, you don't qualify for the program. The maximum loan purchase price is 726,200. So that's the Fannie Mae conforming loan limit, and that's as high as that we will go on this program for Riverside County. For other counties, we do go higher. I wanted to mention that the program allows to give you 20% down, but you have to pay your closing costs if you use a 20%.
Okay.
If you do not have enough for your closing costs, we can do 17% down and give you 3% to help you with the closing costs. However, if that's the case, you're now in a position where you will have private mortgage insurance for that added for
Okay.
not having the 20% down.
Okay, so 20% does away with the PMI, with the private mortgage insurance. And also, this is like similar to what we run into sometime with the VA loans that says 100% financing, is that you still need to come up with the earnest money or deposit to start escrow. So, and working with a realtor like myself and finding a home and getting an offer accepted and opening escrow. But I understand that earnest money to open escrow can be applied towards the out-of-pocket cost for the closing at the end. That extra money you were just talking about, correct?
And there are some added fees on
Okay.
this program. So it's important we discuss that with the buyers when they try to apply.
Okay, so they will have to come out with some money, because if we think about 80-20, 20% down payment, 80% of loan, it sounds like 100% financing, but you're saying there are extra fees and there are funds that they would have to come out with. So can you tell us a little bit about what you've been seeing with the applicants here in the last few days?
Well, typically, most of my applicants have enough for the closing costs.
Okay.
But if they don't, then we have to consider the PMI and qualify them with that. So that reduces their ability, their potential purchasing power, because now they have that extra expense.
Okay. So would you say like $10,000 is kind of what they need to have, or depending on the purchase price?
I'm gonna give you an example, because I
Okay.
have one in escrow right now and another one opening escrow.
Okay.
And the purchase prices are in Orange County. Their condos 500,000, and the closing costs are roughly $15,000.
Okay. Okay. All right. That's good to know.
Just to give an idea.
That's good to know.
Now, I wanted to cover property types. I think this is
Okay.
really important. Important to you. 'Cause
Yes.
I know
As realtors, yes. And dealing with accessory dwelling units.
Yes.
I did understand
So-
that it has to be, maybe single unit, and it could have an ADU on there, but we
Yes.
can't build it up from the ground. So, yes, tell us about that.
Yeah. So it's condo, single family, manufactured home on permanent foundation, not in a park.
Okay.
Also, single family homes with an ADU, as long as it's legally considered a single family home.
Okay.
So not converted to a 2-unit. Sometimes when they add the ADUs, they classify them as 2 units. And hopefully, if a buyer is looking at a property with an ADU, first thing to do is look up how it's classified.
Okay, and if it's classified as a single family with an ADU, then
You're
they can purchase it.
Yeah.
If the structure is, say, not fully permitted, are they allowed to bring it up to permit since it's existing, or does it need to be fully permitted?
If it's done in a workmanlike manner, we don't really require the permits.
Okay.
But the buyer needs to understand the consequences of not having the permits.
Okay. But they can take care of that once they purchase it or whatever, but they're able to purchase it with the 20% assistance.
Exactly. As long as it's done in a workmanlike manner, we're good to go.
Okay. That sounds great.
Okay.
So, are there any other tips you can give us regarding the program or the questions?
I can tell you about income. We
Okay.
want to see employment. Typically, they have to have at least a 2-year history, work history. So they can have a new job, but we want to see that they have been in the workforce at least 2 years. If they're students, recent graduates, we will work with their transcripts. If they were in college and graduated and have now in the workforce for 6 months,
Right.
and we'll offset the work history with school.
And then with the work history, it's in the same industry, right? I mean, if it's a teacher and she's relocated to another district, but she's still a teacher
Fine.
type of thing, it's just
That's
not
fine.
changing industry. So you would be like in a new industry for 6 months and
Typically, they don't really put a lot of weight on, they just want to primarily see that they've been employed.
okay.
The consistency of employment, it doesn't really matter the job function in itself.
Okay. Yeah, because I mean, with what we've been going through the last couple of years, there's been a lot of changes in where people work or the type of work and adjustment. So
Yeah, and
as long,
they can have a gap of up to 6 months, but they need to have an explanation. So
okay,
gaps are allowed as well.
okay, and they're really still qualifying for a conventional loan, which allows them a little bit more negotiation power with the seller. Correct?
So yes, and what's nice is that we're qualifying to Fannie Mae's guidelines, which are, very flexible. And also, when we take an application, we have to share it with CalHFA, but they do not they allow us to underwrite the income. What they're looking at is doing the search if they're truly first-time buyers, and they're looking at the property to make sure it is a single family or condo, or those are the things that they're going to look at when we give them the file, but not necessarily dissect the income. That's up to the lender to make
Okay.
sure it's Fannie Mae's guidelines.
Okay, so if they're not first-time buyers or don't qualify, we still have FHA and other products by
Yeah,
which they can purchase a home, but they still have to come up with that down payment, and FHA would require the PMI. So we're talking about higher monthly payments as well.
yeah. They
Okay.
they and they can also qualify conventional, but they'd have to put a minimum of 5% down,
Okay, so they're 5% conventional if they're
or three and a
non-first-time
half
buyer.
FHA. Yeah.
Okay.
Mhm.
Okay. Well, that's great to know. Now you say your phone has been ringing off the hook. So can you tell us some of the questions, some of the questions that you've been answering one on one that you would like to kind of broadcast to the masses here?
I think the question is, what's the catch?
Okay.
Everybody wants to know there's got to be a catch. Well, nothing's free. So you do share in the equity. And then we get, oh, so there is a catch. Well, it's really, you're building wealth without having to use a lot of your own resources. So I don't, and personally think it's a great program. There's very little restrictions. And if it's only sharing in equity, I think people need to take advantage of it. The other thing is I'll go into details how to get into the program, but the funds, there's limited funds. So it's important that who's ever's interested and should get approved immediately. And the funds do not get reserved for the applicant until they find the home. So it's not just getting approved. It's, the steps are these. First, you apply and you allow us to get you pre-approved. Once you're pre-approved for the program, there is a home buying course. If you haven't done it yet, you could do it online. It's through CalHFA and it's $100. And you go through the course. And once you're done with the course, you schedule an interview. The interview that they do is to make sure that you understand, what's your budget, how much you make, what's your house payment going to be. Are you going to be able to afford it? Basically, they're walking through the steps of a budget for you and making sure that you understand. And so once you complete the interview, they give you a certificate. In
Okay.
addition to that certificate, which is the first-time homebuyer certificate, you also have to go online to CalHFA and take the shared appreciation course, which is 20 minutes, and it's quick. And they just want to make sure you understand what the shared appreciation entails, and
Okay.
then you get a certificate for that. So you get pre-approved, you have your 2 certificates, you find the home, and then we reserve the funds. We lock the loan and reserve the funds. The rates do change. So this whole week they stayed flat, but they typically changed according to the market.
Okay. That sounds great. And we're going to talk about a little bit how that the buying process looks like or home search, because a lot of time as a realtor in dealing with buyers. They don't understand that they need to be pre-qualified and to have that documentation when we submit any offer. Okay, so before we can actually submit an offer to be considered by a seller, we have to prove that you are qualified. So we're going to take a quick break, and when we return, we're going to talk a little bit more about the buying process, and Lucia's going to tell us about how we can apply the steps to take. So stay with us, and we'll be right back.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
Real men of real estate.
Men of Real Estate radio show here on KCAA.
Boats, mortgages can be purchased.
All of us want to live in thriving communities.
Basically, go to the radio station KCAA radio.com.
You can find us on your dial at 102.3 FM, 1050 AM, as well as 106.5 FM.
Are you a real estate investor looking for a new opportunity in one of the top tourist destinations in the world? Look no further. Welcome to Punta Cana. Perla Bahia is a private resort-style community in Punta Cana that consists of modern condos, custom villas, and various commercial amenities. So if you're interested in learning more or joining us on one of our monthly investment tours, don't hesitate to contact me today at 909-494-2280.
Welcome back to the International Wealth Builders Radio Show with your host, Dr. Sharon Barnes. I'm here today with Lucille Solis from Guaranteed Rate Affinity, and we are talking all about the new California Homeowner Assistance Down Payment Program. And so before we went on break, we were talking a little bit about working with the realtors such as myself and others that we require buyers to get pre-qualified. You have to have documentation to submit with your offer. And so until a realtor can really see what you're qualified for, it's hard for us to identify proper housing for you that meets your criteria. And then once you see one that you love, you know, we need to put the offer together in the most positive manner and to present you in the best light. And we need to have you qualified, your documentation for that. And so this program is one you can take advantage of. And Lucia was telling us about the pre-qualification letter, the classes, and so forth, so that you can go to the top of the seller's list. Right now, our market is still very versatile, and things are back at multiple offers on property. We still have low inventory, and so we need you to work with lenders like Lucia and realtors who understand the market so that we can get you at the top of the list and help you find your new home. So Lucia is back with us, and we're going to continue. We're going to continue to talk about the California Homeowner Assistance Program, and I believe she was going to tell us something about the steps on how to apply and how to actually get qualified. So, Lucia, welcome back.
Okay, thank you. So if you're interested in finding out more information, we're happy to share. You can place a call, or you can also go on to CalHFA's website. That is calhfa.ca.gov, and there's a tab there for home buyers. So you can go on there. They have a lot of programs, and to avoid confusion, please make sure you go into the DREAM. It's the California Dream for All program. You can see some highlights there. But in order to get approved, the first step, I would read up on the program there a little bit and then go online. We have an online application. Everything's electronic. You simply go on. It's very user friendly. You go on and you apply. And then when your application comes through, we send a link for you to upload documents. Typically, we want to see your pay stubs, your W-2s, and 2 months bank statements. And with that, if there's no questions, with that, we should be able to qualify you income-wise. And we'll look at your soft pull credit. So we'll review your credit, we'll review your income, and we'll come up with a house payment that you would qualify for. And so once we determine the purchase price with the half a down payment, then we issue an approval letter. And within the approval letter, we state that you're approved with this down payment so that when your agent goes to present your offer, the listing agent is aware that the funds coming from a government program. I think too, we need to educate our realtors in that. I know in the past with government programs, there's always delays. Well, in this one, there shouldn't be any delays. We should be able to close everybody in less than 30 days. Their turnaround time for reviewing our files is 48 hours. So we shouldn't have a problem meeting your deadlines, contract deadlines. So we need to just make sure that our listing agents are now aware. When our realtors make offers, I tend to call the listing agent as well to let them know about the program and to, know that if there's not delays in other programs that we've had delays because there's like 5 different steps. And this one, there's only one step. It's a simple step for CalHAPA to review the file. So
yeah, and that's good to know. And I also like the fact that you mentioned about notifying the listing agent as well as the buyer's agent when we're working together. We, even though before we start going out and submitting offers, we need you to be pre-qualified. We work as a team from day one with the lender, and so we're there to help. We can start looking in the areas where you want to buy, kind of get a feel of where you might qualify for as you're going through, and to help you respond to lender requirements and documentation, because like Lucia says, her phone is ringing off the hook, and so we need a team to get through to the other side to close the transaction. I mean, it's said that every real estate sale employs about 45 people. I mean, there's a lot of moving parts and a lot of people that the buyer and the seller doesn't even realize are operating in the back. And so from day one, you can be working with your realtor and a qualified lender to take advantage of this program. Now, Lucia, I've heard several lenders talking about this program, but I understand that they have to be qualified for the program. It's not that all lenders can do this program, right?
Exactly. The company and the loan officer has to be certified.
Okay.
So our company is certified, I am certified, and I think a lot of our loan officers are going through the process right now to become certified.
Okay.
Because the phones, it's not just my phone. I know all our loan officers are getting bombarded with phone calls. So those who weren't certified are in the process now. But, I'm here to help you and your clients. So we hope that you reach out to us. You don't have to worry about if the lender you're speaking to is qualified. We are. And so we're qualified and ready to help you. So
I appreciate that, and that is good to know. And we just want people to be informed that sometimes they bought properties in the past, or they're working with someone, and just know the right questions to ask, because not everyone can help you get access to this program. And as Lucia said earlier, reading up on the website for yourself, is one of the first places to start. Lucia, like I said, we understand we're back into multiple offers on properties and so forth. And when the Fed started increasing the interest rate here a few months ago, we started hearing about buy downs on interest and so forth. And I understand that we're still buying down some of the interest rates in conjunction with the home assistance program. Is that true? Can we do that, or is
No,
okay?
you can't do a temporary buy down with this program.
Okay.
But you could do, there is allowed the permanent buy down. That's the 30-year buy down.
Okay.
So you can do a little bit of a buy down, but it's not the 2% that we do on other traditional programs.
Okay.
So we can discuss that.
Okay, so it would have to be a permanent buy down. That would be another way to kind of reduce the payment and the interest rate so they can qualify a little bit better. But
you can give them the criteria when we pre-approve them. We can give them, go over the options.
Okay.
Yeah. So
like I said, this market, everything is changing. We, went from multiple offers down to virtually no offers when the interest rates went up to now buying down, and now we got the homeowner assistance program for first time buyers. So it's just a lot of moving parts, and it's very important to work with a team that understands and keeping up with the market.
So something that I didn't share, just as information, if you do not have the closing costs and you have a family member that would like to gift you funds to help you, that is allowed in this program. Also, if the seller is willing to assist with closing costs, that's allowed. So
okay,
if you're a little short on funds, there's ways that you can get assistance.
Okay, so
but in this market, sellers really don't want to help because there's offers being presented.
There's multiple offers. Yeah, we're back to multiple offers, so they don't have to give up anything.
Exactly.
So this is a seller's market again, and we're just trying to get the buyers as qualified as possible to go out and take advantage of this.
So we want to structure the nicest offer possible.
Exactly.
So you get your offer accepted.
Exactly. So are there any other questions that have been coming up besides what the catch is?
Co-signers are not allowed.
What is that?
Non-occupant go-borrowers are not allowed in this program.
Okay.
Now, two people, like I have a sister and a brother, yes, as long as they're both first-time buyers, yes, they can do that.
Okay.
Yeah.
And
or even people who live together, are partners, they can buy two together.
Okay, as long as both of them are living there for the 12 months.
Yes.
So this is definitely not an investor type of program, especially for the first 12 months.
Mm-hmm. Mm-hmm.
Okay, they have to live in it, and then if they move out, they can keep it. There's no force to sell it. They can keep it.
Mm-hmm.
Okay. All right. Well, that's interesting. That's a way for families to leverage the property that they own and control at that time and go out and start building generational wealth with the second unit.
And it was a great program for that.
Okay. You were saying that they leveraged it launched it last year, but it wasn't successful. Do you have an opinion of what the major change and why it's like such a robust program?
I can tell you, because I was so disappointed last year because I was getting calls and I couldn't help anybody. It was the income levels.
Okay.
You had to be below the medium income. Well, if you were below the medium income, it's hard to qualify for a house payment.
Right.
So this time around, they went with CalHAPA's income limits, which is $173,000, which is more than enough to qualify in this market for Riverside. LA County is a little higher. Orange County, I think, is 235. San Diego is 211.
Okay.
So definitely depends on the county.
And then you were saying that it only applies to the houses at 729. Is that the
726,200.
Okay, is that the limit?
Here's something too, an additional feature. If you have 10%, for example, if you're buying a home for $500,000.
Yes.
And the program allows you to put, or the grants for the second, it's going to be $100,000. You can put up to an additional 10%, but you can't go beyond 30% total between the program and your funds. So if you're having issues qualifying and you have money saved up, you can use your money towards a down payment too, but not to exceed 30% combined between both programs.
Okay, so you can combine. Okay, so if I've been out looking for houses or trying to save up money, and I've only got like maybe 10% or 5%, and now I can qualify. I have a good FICO score, 700, and I can do 50% income to debt ratio. Then with that 5% I have saved up, and 5% gift from my family, and 20% from the homeowner assistance program, I have 30% down payment, which makes this California house a lot more affordable, right?
Yes, and that's the key is the debt ratio. You know,
Okay.
it's not exceeding if your income is because we have a lot of calls and the clients are limited on their income. Like they make 6,000 a month, 3,000 it could be their expenses. So you take 3,000 and you minus car payment of 500. Now we're left with 2,500 for a house payment. It's a little difficult.
I understand.
So income, it's a challenge with the debt ratios. So if you have added income, like I qualified one this morning for Orange County, and she's saying, "Oh, I can't find a house in Orange County for 775." And I said, "Well, you have 50,000 in the bank. You could put 25,000 of your own funds to get to 800."
Right.
So those are things we can do as long as we keep the debt ratio below the 50%.
That's great. That's great to know. We have to take our final break, and we're going to come back with Lucille. We're going to wrap up by telling you how you can contact her, how you can contact myself if you're interested in buying a home, and give you some final tips on this new California homeowner assistance program. So stay tuned. We'll be right back.
FireUp Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
Real men of real estate.
Men of Real Estate radio show here on KCAA.
Boats, mortgages can be purchased.
All of us want to live in thriving communities.
Basically, go to the radio station KCAA radio.com.
You can find us on your dial at 102.3 FM, 1050 AM, as well as 106.5 FM.
Are you a real estate investor looking for a new opportunity in one of the top tourist destinations in the world? Look no further. Welcome to Punta Cana. Perla Bahia is a private resort-style community in Punta Cana that consists of modern condos, custom villas, and various commercial amenities. So if you're interested in learning more or joining us on one of our monthly investment tours, don't hesitate to contact me today at 909-494-2280.
Welcome back to the International Wealth Builders Radio Show with your host, Dr. Sharon Barnes. I'm here with Lucia Solis from Guaranteed Rate Affinity, where we've been going over the new California Dream Equity Sharing Homeowner Assistance Program. It's a mouthful, and there's a lot of moving parts, but we wanted to get the information out to you. Lucia has been very busy this week since the program launched, helping a number of buyers get qualified, open escrow, working with realtors, and I was in a sales meeting with Caldwell Banker where she made a presentation, and so I know it was very valuable and timely that she comes out and actually gives us this information to empower us to help more buyers. So Lucia, is there anything else? We're in our final segment. It's a little short, but I wanted anything else that you want to tell us about the program, or
I
reiterate?
I think we went over everything. I don't think we left out anything, but I just think it's important right now if you have any family members and or friends who have not purchased, have them call, have them try to apply. I mean, this program is limited and the funds will be depleted. We don't know how soon, but there's limited amount of funds. So I think they've allocated, I've heard different amounts, but I Googled it because we've been hearing 300 million, 150 million, but it shows online that there's 500 million.
Okay.
So I think if you've wanted to buy, or you have children who you think wouldn't have an opportunity to purchase, this is probably the program to help them. Our younger generation is having a difficult time qualifying. This may be a great program to finally get them started. So
yeah, I agree with you. I think it's a great program, and we've had programs come up before. You talked about the government programs in the past, and some of them had overlays that took a long time, and money ran out before people could get up. And then with the accessory dwelling units, we had like a $40,000 grant, and I mean it went within hours. So imagine 20% of 500 K. We're talking about $100,000 and above that people are getting for assistance. So even though 500 million sounds like a lot of money, it can be gone very fast. So this is a time, like I said, we're trying to get you information to empower you to take action now, to reach out to myself at SharonBarnesRealEstate.com, or you can call me at 909-708-5263. I'm also, like I said, associated with Caldwell Banker, one of the largest real estate brokers in the country, and we are positioned to help as many buyers as we can take advantage of this program. So no matter where you are, if you're interested, reach out and we'll be able to put you in contact with a local realtor and lender that can help you take advantage. And I think, like you said, for the young adults, it's very very helpful, and being able to have family help you get that first house. And if that first house happens to have an accessory dwelling unit on it, and you can turn it into investment property and be a multimillionaire by the time you're 50, it's time to act. Okay.
And we do not discriminate on age. So as long as you're 18 and over, and there's no limit on the age, so we're ready to help you. Anyway, my name again is Lucia Solis. My website is grarate.com/Lucia, Lucia, last name Solis. And my number 562-587-2669. I am with Guaranteed Rate Affinity. We're one of the largest mortgage bankers in the U.S. and ready to help you. So
thank you so much.
Yeah.
And we did mention that that Lucia has spent time in Ecuador. She's very fluent in Spanish, so don't hesitate to reach out if you need other language assistance or whatever. Like I say, being with some of the largest real estate professionals in the area, we'll be able to put you in contact with people who can speak your language that can help you, because we definitely want to help as many buyers as possible get qualified so we can go out and help you secure your next home. So again, I'm Dr. Sharon Barnes with Caldwell Banker and ADU Advantage. You can see me if you're interested in accessory dwelling units. Connect with me online at ADU Advantage on LinkedIn, on Facebook, and SharonBarnesRealEstate.com, and I am here to serve. And I hope you found this show very informative and that it empowered you to take action now. So reach out. We look forward to serving you. Have a great day and enjoy the rest of your weekend. Thank you for being here, Lucia. I appreciate you so much. Bye-bye. Talk to you soon.